Good afternoon, everybody, and welcome to Ask the Experts for Wednesday, March 17. My name is Carl Capolingua. I'm the market analyst over here at Think Markets, and it's a pleasure to join you as you control the conversation. We'll talk about any stock or really anything else. It could be Bitcoin, it could be bond yields, whatever you'd like to talk about. That's what we're here to do. We'll do that after we talk about the Think Markets difference, of course, which is substantial, $8 flat rate trades, your own holder identification number, unlimited phone support, and of course no hidden platform or subscription fees for fantastic reasons to make sure your next ASX share trade is with Think Markets. And that's really all the formalities out of the way. We'll head over to you now and get to your questions. If you're listening to the recording and tuned in on time and then didn't see anybody there and tuned out, that's my fault. I was trying to get this Zoom thing to work here and things are a bit slow today, but fortunately I did manage to get online. Matthew's come in with IOU, and we can see the slowness of this computer today, which is part of the problem. I've been trying to troubleshoot that. So this is Ioupay. It's that buy now pay later upstart that rocketed a little while ago. They managed to sign some deals in the US. Off the top of my head, popped up through that 28 resistance level, got as high as 85 during the hype. Might actually just switch to another screen here and have a look at them on that, because this actually brings in my volume and volatility analysis. It also compares how the stock is performing against the broader market index. So up the top where it says RSC 21, RSC stands for relative strength comparative. So just pure price-based performance against the ASX 200. And we can see it's beating the market on all three of the key timeframes I look at. So 1 month, 3 months, and 6 months, just starting to pull back a little bit on the 1 month one. However, it has had obviously a fantastic run up to 85, as was not unsurprising, I think, when you have candles like this. And I do often have the bars up when I'm looking through many charts. And it's just simpler to look through that way because my brain processes them as candles anyway. But for the purposes of this, we like to keep it as educational as possible. We'll actually put the candlesticks on. And once we get into these huge range moves, so 1, 2, 3, you certainly wouldn't be getting out on any of those candles, but we would become more attentive once we get into these massive moves. And we're looking at 10 times the typical range in a session, and then we're looking, obviously volume is expanding rapidly as well. We're looking for any price action signals that could spell the end of the trend. Certainly this candle here is not fantastic, but not necessarily a killer. This one is confirming that one not fantastic. This is probably where you starting to trail stops up, maybe even to 50 cents under this bar if you're a short-term trader. Probably not too disappointed with an exit around there, given it didn't get too much higher. It has pulled back to roughly half of the price increase. It has pulled back to a dynamic area of support. So this light green zone here, they are my 21 and 34 exponential moving averages. Why do I like to use those? I just do. Is the long story cut short. We do tend to find that the price trampolines off this zone regularly, not all the time, but regularly does. And we're certainly seeing that now. Not seeing the sort of completion volume that I'd like to see necessarily to tell me that all the selling is out of the system and the buyers have stepped in. So there's one slight reason for concern that this rally from that zone might not be sustainable. But for now, I'm happy to back this one. I think you've got a logical stop level here below that low of 41.5, with an entry around current prices of 49.5. I guess it's 20% downside, and your upside, could be anything, but probably back into those highs around 80. Will we see these magical, stellar, exponential, explosive gains that we saw previously? It's unlikely to occur that way. I mean, typically once they've had those big moves and pullbacks, they tend to be a bit more of a slow grind as the reality sets in. And the good news is there, but that excitement, that first time excitement, is not with the market, the shareholders and potential participants. So short-term trend is up, long-term trend is up. I can't see anything in the technicals that would suggest that this one is destined to go a whole lot lower, to be honest. But I don't think it's a lock. It's an open shut case. You would just jump in here and expect to see those easy gains ahead. If I had seen a big volume spike into this low, and then really probably even some better candles coming up, I'd have more confidence. But for now, I think it's probably not as bad as a 50-50 bet. It's slightly skewed towards the positive side. But if you ask me honestly, would I put my money to this right now? The answer would probably be no right now. There's just too many risks. There's too many risks at this stage. The great time to get involved, and it's perfect hindsight, is when you see that volume and that candle come in, and that was back here. Of course, that's perfect hindsight, but that doesn't mean you can't take a mental picture of that and then look for the next one or the next one to occur. If it's not there right now, then there's no real reason to get too excited about it. All right, I've got another suggestion here for NST, and this is the big gold mine at Northern Star Resources. I might just in the background queue up Ioupay and see if we've got any fundamentals on it. And you can see the spinning circle of death, which has been plaguing me all morning. I just recently did an update, as many of you probably did, one of those automatic updates for Windows. And ever since then, the computer has been, what's the technical term, cactus. So bear with me, and we will try and get that going. I'll press that. It takes a little while to load up. We'll head back to Northern Star in the meantime. Okay, so first and foremost, when we're looking from the technical perspective, we want to see uptrends for longs and downtrends for shorts. The trends are designated here in the short term by that lighter pink zone, and then the darker pink zone is the longer term trend. We can see that the long term trend switched to a downtrend early March, but was under pressure, significantly under pressure really, since this break through the trend zone in December, and that would, when you close below that trend zone, that's usually a pretty reliable exit signal there for your longer term holders. In terms of your shorter term holders, when you close below that short term trend, that would be a fairly reliable point to exit a short term trade. Similarly speaking, so longs are very difficult from here simply because both of those trends are pointing down. What does that mean? What does it mean if those trends are pointing down? Well, it tells us that on balance, there's more supply in the market than there is demand. I mean, that's ultimately what moves prices, supply and demand. And the only way prices can go down is if on any day there's, these black candles, I mean, they stand out. Supply is greater than demand there, and then you get a string of these days telling you that, more broadly speaking, that's the case. Now, why would supply be greater than demand? Well, the people who own the stock don't want to own the stock anymore. The people who could potentially buy the stock, they have cash, and they're considering Northern Star amongst all of the other alternatives, and there are nearly 2,500 of them. They think that other stocks are better than this one. So that combination of I'm in the stock and I don't want to be in the stock anymore, and, well, I'm not in the stock and I don't care for it, is not a great combination. That's how these short-term, any of these trends are created. So until we see the demand come in and say, I think this is really cheap right now. And how will you know demand's come in? Well, those candles will turn white, and they'll turn consistently white. Yes, we had a little one here. Actually, quite a good one there, but it wasn't followed up. There was no confirmation. We went back to those black candles pretty quickly. So until we see, a nice white candle like that, preferably we'll see some volume come in here to say that it's reached that point. It's reached that point where the big institutional investors, who are not ignorant of this. I mean, they're aware of Northern Star. They're aware of all the stocks. All their models cover most of the stocks in the market. Certainly, a large capitalisation gold producer like this. And there's a price. There's a price they'd like to buy at, and it's just not there right now. But when it gets there, you'll know, because those candles will turn white. There'll probably be a volume climax where the last of the sellers are out, and they sell to those longer-term institutional buyers looking for a low. And without those signs, I'd continue to be bearish on this one. Now, I could be wrong, and tomorrow, it could go straight back up again. But I tell you this, it won't go back up again without those white candles, and that's what we'll be looking for. So it's a pass to me on that basis. If you're in it, can it go lower? Probably. So, that's the first part of the conversation is for people thinking about buying it, and I'd suggest it's not the right time. This is a weekly chart now. If you're in it, could it go lower? Probably. Yeah, I mean, $8 is is probably the major support down there. And if you started to see those candles and the volume come in around that level, that might be where you could try and pick it up. Let's head back. Looking for another question out there. I know we've got lots of participants. Don't be shy. Get on the chat function there. If you can't find the chat function, that's always a problem. I'm generally not a participant in these. I'm generally giving them, so I can't give you advice where the chat is, but start clicking on buttons and menus and see if you can find it. Let's head back to the Ioupay fundamentals here, because we don't just do technicals in Ask the Experts. We like to do fundamentals as well, and it'll be largely dependent on this little icon here, which is Thomson Reuters data, and they collect and curate, collate all of the big brokers, expectations, predictions. The brokers submit them, and then these guys kind of put them together. So not all brokers cover all stocks, and some stocks aren't covered at all. In fact, you look at here, there's really only coverage, I think, from one company, one broker, I'd say, even though it says two up there, not sure why, who has a buy on it. It's generally not specified to us users. They try and keep that anonymous, and we don't have a lot of predictive data in here. So this would normally say FY21, which is the current financial year, FY22 and FY23. So unfortunately, we don't have a lot to go on with Ioupay, I would expect, because when you're looking at the previous, a lot of negative sides in there, they're not making money at this point in time. And many brokers won't cover a company until they begin making money, or they're very, very close to doing that. So unfortunately, I can't give you a fundamental on Ioupay because there aren't a lot of fundamentals around for it, and I'm not, I'm not full bottle on the company as it is to recite them off heart. Let's have a look at NST, and we will get plenty of data on that, but maybe whilst this is taking forever to find that data, let's head back to the chart, and we've got another suggestion here for Qantas, which is a nice one to put up next, because we'll stick with the weekly chart here, which we can see some of the things we'd like to see on Northern Star before we would begin to consider that as a potential turnaround play. So, dead giveaways, big white candles. After, look at the deluge of big black candles there, the white candles are telling you demand is stepping in. We talked about volume climaxes before, so the last of those nervous sellers, the non-believers, getting out, and they're turning their stock over to people who are finding value there. Their models, their long-term models, are saying this is the price, and we're prepared to take that risk. So you get a changing of the guard. So certainly down here is similar to what we want to see. And if we started to see that, Northern Star would get more excited. As we progress through the piece, nothing goes up in a straight line. You're going to get these ebbs and flows. More recently, I think it's starting to look quite good. Again, a little volume push here. So for me, that's supply removal, so removing some of the doubters and some of the new entrants coming into the market. It's good to see them doing it. Around $5, and it sets it up for a move, I think, into that 7 area. We'll head back to the daily chart. And yeah, look, there's the ebb and flow in the candles there, but otherwise the short-term trend is established and to the upside, and the long-term trend has just established, so that's a pretty good sign as well. Nothing sinister in the volume or the ranges to suggest that what we're seeing here, this 2-day pullback, is anything too sinister. It's good to see the company now outperforming the broader market. We're targeting outperformance. We want to buy stocks that are beating the market in terms of the last month, getting there on the 3 months, but he's actually ahead on a 6-month basis, so that's pretty good as well. So I've got no problems with Qantas. I'm happy to be a buyer or a holder of that one. Let's head back to Northern Star. Still retrieving. So I don't know what's going on today, ladies and gentlemen, but we'll persevere. I can certainly do the charts, but there we go. We've got some numbers, so we can see whether earnings are growing or declining, and looking at the EPS line there, and you can see from 17 we went from 35 cents to 18.32 cents, then 29, so 28's just updated. But 20 was a good year, and we're expecting, so brokers are expecting a nice performance through FY21 and improving significantly through 22 and fairly flat in 23, but things are expected to get better. So that's a positive sign. We've got some dividends in there as well. The PE, this year's PE is 15. I wouldn't say that was all that expensive, especially given that the PEG of 0.32 is very attractive. Really anything less than 1 is what you want, the lower the better. So that's quite good. So falling to 10 in FY22 and about that in FY23. The numbers look pretty good here. I'm pretty happy with that one. If we just turn some of those numbers into charts, revenue, you want to see that heading bottom left, top right. It is. Free cash flow, bottom left, top right. It is. And these have become cash cows now, as long as the gold price stays around here, which I don't see it going too much lower than where it is. I'm not necessarily thinking it's going to go a lot higher either, but that's fine for these gold miners. Dividends per share, bottom left, top right. Earnings per share looks good. The ratios, sometimes they're the opposite. You want to see something like an enterprise value to revenue falling. So top left, bottom right, that's what it's doing. Price to free cash flow looks good at around 5 or 6 times. Price to earnings ratio looks good. PE growth ratio looks good. So it's one of those stocks. Dividend yield looks good. We go to the comparative rankings, compare it against the stocks in the top 500, which are basically all the stocks that earn money anyway. It's fairly solid. You know, it's definitely sort of a B plus in terms of the fundamentals. We just don't have a chart yet, so it's one you want to watch. It's one you want to look for signs that those buyers are coming in, and then I think you're getting a bit of a bargain buy down there on Northern Star. No point looking at the Qantas fundamentals because they kind of don't exist. FY20 COVID drove a truck through those numbers, and even FY21 they're going to be basically break-even proposition. And but the numbers, the predicted numbers for FY22 and 23 do look good, and it doesn't look expensive at all. Okay, looking for some other questions here. I'm happy to go over time today, obviously because of the late start, and I'm going to get to Bipin's one here, which was Nickel Mines, which is a company I do like. Short-term trend is up, long-term trend is up, and having said that, bottom left, top right, everything looks wonderful. I'm a little bit concerned about what's happening here. I don't like to see these sorts of candles occurring at a previous major point of supply, which is what this level is. So we're down, we're up. So we've got lower peaks, lower troughs. We actually move into a medium-term downtrend here. A straight line back up to test, and then the supply is in at this level. So, we often say that those major peaks, and they're the ones that are on each side of one of these price action trends. So it's this one here. We often say they're major points of supply, and the market is telling us that. The market is saying that we hit that level, and you can see the supply that came in, even a little bit of volume there. So there were a few people, few investors waiting for the price to get that level and hit that level pretty hard. So that's a little bit of a concern. Makes me a little bit more neutral on the company, but it is, candlesticks are a very short-term measure of what's happening, and the longer-term trend is still up. So I would be typically in this situation looking to trail my stops up. I'm guessing you're probably doing quite well on this one, Bipin, because we've been recommending it since it was about 70 cents. But it might be time just to tighten those stops, take a little bit of profit off the table, because it looks like other investors are doing that as well, and maybe sell half, keep half, and the other half with a tight stop and see where you can go. That would be my view on that. The fundamentals on this are still very, 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 very sound. However, the big problem for this one is not necessarily what it's doing, because it's doing some fantastic things over there in Indonesia. But the problem might be nickel, which has taken a pretty big hit of late. And we'll go to that chart there. So we're talking candles, and you can see some pretty big black candles at the end of nickel, and not a lot of a bounce in response to that. And that was due to a supply side shock, which are very rare, rarer than you think in markets where a Chinese nickel conglomerate has cracked the Da Vinci Code on how to turn your basic pig iron nickel into battery grade nickel. So that means that whilst the battery grade nickel was very scarce, it's no longer as scarce as people had thought. So that's a little bit of concern, and that might be why some of those longer term holders are rather than embracing new highs on nickel mines, they appear to be selling into those highs, which is what we're seeing at the end. So I'd say overall trend looks great, but at the short term I'd be cautious, and you may even want to take some off the table. Matthew's saying, why do you think the NST price will keep dropping when the company makes a lot of money and has good growth? It's not up to me. So if it was up to me, I'd wave my magic wand and let everybody in the market know that the company's making great profits. But I expect the people who are trading in this company know that already. They do great analysis, and they understand all of these things, and yet it's still going down. So as traders, we have to think a little bit less about what we think about the company, and we might think this is a fantastic company, it's got great growth, etc., and defer to what the market's saying, and the market's saying that regardless of what we think, it's not as good as we thought. So the honest answer to that question is it doesn't matter if it's got good growth and it's making good money, the stock's going down. Now, it'll find a low point and those things will come into play, but the chart will tell you when it's time to buy, because you start to see those white candles popping in. We've got a few others here, sorry, that I've been missing, so let's try and catch up very quickly. MFG. Look, it's similar to Northern Star, isn't it, in terms of the short-term trend is down, long-term trend is down. You can see here, actually, how these short-term trends work. So I mentioned earlier on how they tend to trampoline higher off the light green zones. Okay, not all the time. Sometimes they get through, and that's why we use other technical analysis tools to give us information. But on the downside, once they turn into downtrends, they tend to resist the price going higher. So we call them dynamic support and resistance zones. Dynamic because they keep moving, they're moving averages. That's what's fantastic about it. A static zone, for example, is this point here, which strikes me as a major static zone. It's backed up here as well. So something like MFG, you would expect at this stage, there's no reason to suggest why it can't continue this downtrend. But even if it were to move higher, you would expect some significant resistance around that sort of, initially 50, then 52 to 54 zone. There is a little bit of hope here, though, in this candle. I mean, that's a pretty good reversal candle. It's taken it into that resistance zone where there are going to be some sellers. So it's a first step in the right direction. But what you would probably want to see is another bunch of white candles coming in around here. Okay, and then we're going so far into the future now, it probably isn't even worth discussing. But if you saw those white candles appear in here, and then we started to move higher again, and broke through specifically this point, that's when you're starting to get more positive on the stock and potentially looking to take the risk. And that's all trading is are we prepared to take the risk? Well, we take the risk when the balance of probability is heading in our favour. And right now it's just not doing that, and we're waiting for confirmation. We're waiting for more signs to tell us that demand is building in the market. How will I know demand's building in the market? Well, we made a low here and we made a higher low. You can only make higher lows if demand is building and if supply is diminishing. If we get through the supply point here, it's telling us that there is less supply. The combination of building demand and less supply is generally a good time to be involved in a stock. So that doesn't look too bad in the sense that we've got the start of a potential turnaround. We just haven't seen that yet in Northern Star, but there's still plenty that needs to be done for MFG before I got excited on the chart. The next one is MP1, which is Megaport. And again, you can see how trends change. And this is one that has gone from that nice uptrend over an extended period of time into now a downtrend. There is some positivity here, and I'm really being very optimistic by saying that it's very a very small positive sign. I'm just looking at the shadows on the candles, but there's just not enough in there to suggest to me that this is turning around anytime soon. And I could be wrong. Tomorrow it could be $17, but we're just not seeing that the probability for that is very high at this stage. Right now, the probability suggests that we would continue to the downside until we see, and that we get a new candle every day, and that's the beauty of it. There's a new candle. There's another piece to the puzzle every day that we need to put together and make some sense out of. The next one is Kogan, and then I think I've caught up to this list. Yeah, looks similar to Megaport. The trends have changed through here. I might get rid of some of these things because they're just getting in the way. Makes it a bit easier to see what's going on. Resistance is through here, back up to the upside. And again, how will you know? How will you know? Well, those candles will turn predominantly white, or they'll get quite large. We're not really seeing that yet. And then you'll see a pattern that looks a little bit like this. And we're going to see, a nice bunch of candles pop in here. We might even see volume spike back up to tell us that the buyers are stepping back into the market in some size. So until I see that, I think you want to be a little bit cautious on Kogan. A company I do like, though, Kogan, I've done quite a bit of research into this on the fundamental side. It's got great growth. The only problem is that the growth comes at quite a high price at this stage. You wouldn't say it's the cheapest stock out there, but when markets are looking for growth and that's all they're looking for, that's on this side of the equation, that's fine. When interest rates start to go up, and that's what's hurting Kogan at the moment, markets start to focus on other areas of the market. But that doesn't mean they'll forget about growth forever. There will be a time and place for Kogan again. Okay, I think I've caught up to all of those requests. And there's one more from Nuix, so we might end there because I think we're done on time. Okay, so that's Nuix. And we might... Yep, that's all the data we have. So it's a fairly new company, isn't it? It's a fairly recent float. And for that reason, we don't have a lot of technical analysis that we can do. But there's enough there, I think, to tell us what we think about this one. I might throw back to you guys, and I want these to be as educational as they are, I guess, informational, and maybe we can get some people tapping on their keyboard and telling me what they think of this one, just from a technical perspective. I think NXL is a great stock, and great value. Yeah. Okay. Well, again, that's a personal opinion, and we need to defer to the market, whether the market thinks it's a great value. I would say there are some good signs popping in here at the moment. So this candle here is quite interesting. Because there's very little data, I don't have any volume or average true range yet, because just my look back period is longer than there are bars, so I can do fairly limited analysis on this one. But it's a similar pattern to what we talked about that we want to see on a few of the other ones. So this idea of making a second low that's a little bit higher, and then pushing through potentially the peak that's caused between those second lows. So this one might start to look interesting on a breakthrough that, and I'll give you the number exactly. That high there, which is 610, until it gets through 610, and I would like to see a nice close above 610. So close above 610 with a good candle and some volume coming in, and then if I believed in the story and I was really familiar with the story, then you could have a go at it. For me personally, I still wouldn't be ready because I just don't have enough data for me to make a decision based upon my typical analysis here. But through 610, it's starting to look a little bit better. Look, that's still retrieving. Maybe we might pick up with the Kogan fundamentals in the next session. Here we go. Okay, looks like they're in. But we can see the EPS line is the one I'm looking at primarily here. So, 4 cents EPS in 2017 into 15, 18, a bit of a slow year in 19, but then great for 20. And look at the numbers. They're just spectacular. It's just fantastic growth. We're even starting to get some dividends out of this one now. But it's a really exciting company. It's hard to get that sort of growth in our market. The only problem for Kogan is that you're paying quite a bit for that growth. So FY21 PE of close to 30, and then really it's not until FY23 that it comes down to 20. So you'd like that to occur a little bit sooner, or pay less for it right now. But you might get that opportunity because the share price is falling. So if you're not in it, it's definitely one I would keep a very close eye on, because it's one in the long term I do like to own. Okay, let's wrap it up there, everybody. Thanks for joining me. Thanks for everybody who participated today. I know it's a little bit tricky getting around the technology because, as you saw, I had to fight the technology extensively. I will no doubt Google the hell out of why did the last Microsoft update ruined my computer and try and rectify that for the next one. In the meantime, let's finish off with the disclaimer because Think Markets, who is a regulated Australian broker, I have to do that. So thanks for joining me today. You can catch all of our other market news updates in the market news section of the website. You can follow me or the Think Markets handles on Twitter. In terms of upcoming events, well, that top one, that's where we are right now. But next week we'll do how to create an investing plan. Very, very important indeed. It's your starting point for all of your investing. And then we'll continue with our series of three stocks of interest, and we'll do our top 3 turnaround stocks on the 7th of April. And you need to go to the webinar section of the website to register for those. Everything we've just discussed today is general in nature. It may not have taken into account your personal financial circumstances or particular needs. We are a regulated Australian broker. We do have some products that could see you lose more than your deposit. So please read this disclaimer carefully. If you have any questions, please give us a call. We're more than happy to chat with you. Otherwise, all the best for your trading. Until we catch up again, bye-bye for now.